In today's video, I want to talk about investors that get married to a stagnant sector. So we see this happen a lot, and this is the chart of oil. But you get a really big, powerful, trending move that lasts a good long while, and by that I mean year and a half, 2 years, and everybody becomes convinced that this is the sector you want to be in, and they're waiting for a pullback, and they want to buy the pullback. The problem occurs in that these really big trending moves that last, year and a half, 2 years, 3 years, they tend to be followed by either really wicked pullbacks or a very long, frustrating sideways consolidation, or both. And so I'm going to show you some sectors that I think are stuck, and I see people trying to force trades into these sectors. Either they think that the correction is over, or they're waiting for the trending move to resume. They're still stuck in recency bias, and they're waiting for the next big trending move. So this is the chart of oil. This was a gigantic move from that washout bottom in 2020 to the top on the initial Russia invasion of Ukraine. And I've watched, and I warned people this was going to happen. I warned that this sector was probably going to be stuck going sideways in a difficult back and forth market for months, if not a couple of years, and that this just wasn't the area that we wanted to focus on now. But people still remember this move, and the fear of missing out is still strong. They want to get in at the bottom and ride the next move up. And granted, this may turn out to be the bottom, but that doesn't mean that oil is going to take off and we're going to get another move like this quickly. I doubt that that's going to happen. I suspect that this is going to turn into one of these, probably a cup and handle pattern, and so it could be another year yet before oil is ready to break out to new highs. And I'm on record that oil's going to 200, 250, but it's not going to do it this year, and it's probably not going to do it next year. I think it's going to take a lot of time to build out this base. You can see it's been over a year building out what looks to me like maybe the left side of a cup. It could be another year trying to build out the right side of the cup, and maybe even more than that. And then after that, you might have to have 6 to 8 months for the handle of this pattern to form before you can break out and get a strong trending move. And we may very well chop around the bottom right here, building the bottom of this cup for the rest of this year. So I don't think that there's long-term opportunity here, but I don't think there's medium-term opportunity in energy. Here's another one that people have just become very enamored of, is uranium. Again, they got hypnotized by this massive move off of this bottom, and I warned people back here. I said, I think uranium's probably going to be stuck for a long time, churning back and forth before it's going to be ready for another move. People became obsessed with the idea that the world was going to transition to uranium, which it probably is, but it's not going to do it this year, and probably not next year, and maybe not the year after that or the year after that. It's going to be quite a while, and I think that's where, I think the realization of that occurred here, and now we're stuck in this sideways churn where it's very difficult to make money. You've got to buy the bottom and you got to sell the top, and it's next to impossible to spot the bottom in real time or the top in real time. So it's a market where it's very hard to make money and very easy to lose money. Long term, lots of opportunity here. Medium term, you're probably gonna be stagnant at best and probably lose money trying to trade these erratic up and down rallies and pullbacks. Here's the definition of people stuck in recency bias in Bitcoin. Without a doubt, we were in a bubble here. This is what bubbles do. They go straight up for months. Every Tom, Dick, and Jane is buying, expecting to get rich, and then they have the warning shot across the bow, the big pullback, which kind of looks like a lot of the other pullbacks that have occurred before. So people convince themselves that this is just normal for this market, and then you get either some kind of a retest or a double top, and then and then it's done. And that's what happened here. We got a double top and nasty correction. And I'm watching, again, as people are piling into this, thinking that, that this is the bottom. And again, it may be the bottom, but I think you're kidding yourself if you think Bitcoin is going to go back up to 70,000 anytime soon and break out above this and go to 100,000 or a million or whatever target you think is reasonable. I suspect it's going to be stuck. It's going to have these very convincing rallies, and then it's going to give most or all of it back, and it's going to look like uranium. It's going to be stuck, going back and forth and back and forth, building a base that might take years before it's ready to seriously move again and make higher highs. And I'm not even convinced that there's any real value in these cryptos, but if you think there is, it could be 2028, 2030, 2035, who knows, before this thing is ready to seriously challenge these all-time highs and break out. Here's another one, the stock market. Gigantic move, big correction, but not big enough to convince me that we're done going sideways. I suspect, and while of course the Fed and the administration is trying to prop this market up, I suspect people are going to be buying, near the top, and this is probably going to have to go sideways, probably for another year at least. And we've got a 4-year cycle low due here in 2024, so I think there's almost no chance of the stock market getting up here and giving us a sustained breakout to new highs, not with that 4-year cycle low approaching. And that 4-year cycle low could move below this pivot here. It could coincide with a recession, and if it does, then this 4-year cycle is potentially left translated, which means that this is probably not going to make a higher high. And then when the market tops and we start moving down into that 4-year cycle low due in 2024 or 2025, there's a good chance we could break this October low. So again, not a market to take long-term positions that you expect to get a big trending move. You've got to trade in and out of this. So we bought at the bottom of this daily cycle low here when the banks looked like they were going to go under, and we've ridden most of this rally. But now I'm telling people, now it's time to be happy with your gains. Get out of the way, because we've got not only a daily cycle low that's due any time now and may have already started, but we're going to have a bigger intermediate cycle low come due, probably into the end of August or into September. And you don't really want to be trying to catch the last few nickels of this rally and risk getting caught in that correction. You want to buy at the bottom of that intermediate cycle low, probably in September. So now you should be playing a waiting game in the stock market. You're waiting for that correction, and then once the correction comes, then you'll have another opportunity. But even that opportunity, I don't think is going to break out to new highs here. I think we're going to be stuck in a difficult sideways churning market. So I don't think any of these markets are really prime markets for big trending moves where you can make a lot of money. There is a market, however, that is, and this is the one I've been pushing now for months, and that is the metals market. I'm convinced that this is an 8-year cycle low. We had this huge trending move coming off, once this the bottom of the cup, and you can see it took a long time to build out the bottom of this cup before we really started to trend into the advancing phase of the right side of the cup. Keep this in mind when you're looking at that oil chart. We may get stuck in this bottoming base building process for a long time. This was about 3 years before it was really ready to start moving, and then we get this big trending move, and everybody becomes convinced that they need to buy the dip quickly, and instead what happens is gold gets stuck in a 2-year sideways to downward churn into that 8-year cycle low, and frustrates everybody that was ready for this to take off. But I think that is over, and we have made our first test of this resistance zone. We're in the correction. This is going to be your buying opportunity to get in position, because I think this trending move is very it's very early, it's very young in this trending move, and this move is going to go a long ways. So this is the market where you want to buy that dip, because I think this sideways churn is done, and we want to buy this dip because the next rally is going to break out. I'm convinced it's going to break out above this resistance, and then when it does, it's going to the first initial breakout might go to, we could maybe even get to 2,500. Don't know if we get there by the end of the year. We might. 2,300 might be more realistic, but over the next couple of years, I think this move out of the 8-year cycle low is where the major big trend is going to occur, and that's the one you want to ride, because the other markets I think are stuck in these sideways stagnant markets, and you just don't want to get married to one of those stagnant markets. Your job is, once a market has rallied massively and it's now stuck going sideways, our job as traders and investors is to figure out where the next trending move is and get on that move and hang on, rather than stay married to a sector that may have months or even years of churning before it's ready to move again. So there will come a time where we want to get back into oil, and that time may be after gold finishes its bubble phase, and the bubble pops in gold, and then everybody will again want to jump back on the gold market quickly, when in fact that would probably be the time that we want to look at oil, because it's probably time for oil to move and give us that trending move to $200, $250, wherever it eventually goes. But right now, trending move is in gold. I think this is your buying opportunity as it works its way down into this intermediate cycle low. So once again, I'll say it, the SMT premium newsletter will be open to anybody that wants to subscribe for as long as this corrective move is still in play. Once we bottom and we start the advancing phase of the next intermediate cycle, I will close the SMT to new subscribers, and only people that have subscribed during this pullback and buy at the bottom rather than at the top, those people will try and ride that next intermediate rally all the way to the top to 2,300 or 2,500 or wherever it occurs. But I think this is your trending market. This is where you want to focus right now. You don't want to focus in any of those other markets. Those are markets that have already had their move, and now they're going to be stuck going sideways, just like gold was stuck going sideways for the last 2 years. But that is over. It's now time for gold to trend, and that's the sector the precious metals is the sector you want to be in now.